I know I spoke to a few of you before we got started, and just thinking about what does H2 look like, what does next year look like. So JD is a longtime friend of the firm and a longtime good friend of Tony Erickson, although I won't hold that against him. I'm holding out judgment until I get to know him a little bit better, but he comes. He comes highly recommended. So JD has been a CRO multiple times, and he has taken his organizations through 5 PE exits over the years. Feels like a PTSD-inducing endeavor. He's currently an operating advisor, advising on go-to-market topics for 5 Arrows Capital Partners. And he's also the author of the book that you all have in your packet here, the CRO's Guide to Winning in Private Equity. So welcome, we're excited to have you.
Thanks for having me. It's exciting to be here. So I'll start by maybe asking a brave question as we think about the second half of the year. How are we doing against the number? Are you at or above plan for the year? Not there? And if you're brave, would you share what's going really, really well? What parts of the business? Is it new logo growth or price increases? Or what's going really badly? Is it customer churn? New logo, lead gen? Anyone have kind of just halfway through the year experiences they're brave enough to share with the group? I know I started like really personal. Yeah. Go ahead, Jamie.
I won't speak on behalf of SBI, but a couple of my clients, a couple data points. One, recently I was sitting through a QBR through their first quarter, and the rest of the world leader got up and was talking about how prominent the Sell America theme was, particularly in Europe. Yeah. And that had some pretty big effects on them. I was on with a CRO late last week talking through his business, and in Europe, again, very specifically, they missed their new logo number by 70%, over 70%. And they had the pipeline, or what they thought was the pipeline, for that number heading into the quarter. And so a couple of data points. I think it's more than just an isolated set of stories there, but those are some to maybe get the group started.
Yeah, any American companies with international businesses that customers suddenly are curious about doing business with us? Any other themes you're seeing as you think about your second half? Yeah.
Be a little careful because we're publicly traded, so I can't give too much information.
A friend of yours or a neighbor of yours, yes.
But what we are seeing, and it ties into that new logo theme, we're seeing better retention on risky renewals. People are more adverse to making big decisions. And so that means our renewal team and our customer success team are having success on saves, so even delays of expected churn. We have quite big churn components in our business. We're in a hot market space where our competitors are trying to steal our business. So we're doing okay on selling, but we're actually, first half of the year, we're in a better place because we've pushed out a lot of the expected bad events and delayed them, and in some cases saved them because people are worried about what happens next.
Right.
We're also a bit worried about some of our US government accounts, what happens next there, because that may be some unexpected churn upcoming.
Yeah, we see that too. Anyone else? One last experience to share as you think about first half, second half. Yes.
So we actually just did a complete reorganization because our new logo, we just could not get traction in this year with new logos at all. So we've invested heavily into our existing account teams to go deeper and wider within our existing accounts. Yep. So new logos were really, really a struggle for us. And so we have almost uninvested there and reinvested in the account teams.
Yeah. Anyone else turning to the install base for a little bit of like secure revenue expansion stuff? Okay, well, first of all, thank you for the folks who are brave to share. If you're thinking about your own business, I'm going to share a story of one of the companies that I work with. So I'm an advisor at 5 Arrows Capital Partners. We've got 36 companies in our portfolio. I'm like the sales and marketing buddy to our CMOs and our CROs. But we have a brand new CRO in one of our portfolio businesses, and they're not in the room today. So I'll tell some stories about the previous and the current one, but maybe you see something recognized there. They have about $60 million in revenue, and the company is really clear that this new CRO is supposed to drive 20% revenue growth. So you can ask every member of the C team, what's the plan this year? We started at 60 million, we're gonna end at 72 at the end of the year. So we know what the target is. And they sort of know the building blocks. We have to renew some of our customers, and our customers haven't been happy, so there's been some churn there. So we really gotta work on that. We're gonna do some price increases with our happy customers. We've got new logo. We're signing up some partners to do partner sales, and we're gonna launch some new products. And so together, this is supposed to be $12 million of new revenue for them. But that's really where the conversation is stopping. And so you then ask, how does this soup come together? And it starts to get a little vague. We know our customers aren't really happy with us. We hope that they're gonna do better at renewals this year. We're gonna try harder with our CSMs. We generally have gotten some price increases. We're gonna try pushing another 1-2% of price increases on those happy customers. So we're hoping there's gonna be more there. Sales is going through training. We're signing up partners. We're gonna get another new partner signed up this year. And in the second half of the year, product is gonna come out with some new modules. And together, crossing our fingers, hope it's gonna get there. And that's really where the challenge is for this company, because they also know that there's seasonality to the business. And they can tell you pretty clearly, anecdotally, we have a slow start in the beginning of the year, then things pick up, then summer break comes and our business slows down, but when the kids get back into school, we're selling is happening again. And so they're sitting on their first half of the year right now, kind of not sure how all these pieces are gonna come together. And so that's really what I want to talk today about, is as we look at this theme of resetting for the second half, it's really important for us to get kind of clarity on knowing where we've been on the first half and then designing our strategy for the second half. I go to this board meeting and I think about this company, and there's really and I think about the new CRO, and there's really two metrics or two stats that come to mind for me. The first is Quota Path. They're the commission kind of folks. They did an analysis of all of their data from 2024, and they said that 91% of the companies that they looked at did not make their quota in 2024. So, although I start with anxiety and nervousness, if you're a company in the room that says, we're not making our quota, Quota Path says you're not alone in that. And most CROs are not alone in that. And I also look at this stat from Live Data Technologies, and they do all of this research. They looked at LinkedIn, and they look at all of the people who have CRO titles and the comings and goings and the tenures there. And they said in 2024, the average tenure of a CRO was 18 months. And this is a number that's been going down year over year. And so you could look at these two data points and decide, well, these sales teams aren't making their numbers, so we must be firing all the CROs. Fundamentally, I think that's not quite true. Because if we're all missing our number, it's very expensive to turn over CROs. I think there's something else happening there. And so I started to lay out this little chart of really what would that 17 or 18 months tenure, we see different stats in different places, what might that really look like in the day of a life of someone taking over one of these businesses? So each of these little boxes is a month. And we'll be really generous to our HR partners, and we'll assume that they can decide to hire a new CRO, recruit, and put them in place in 90 days. Now, usually that takes a little bit longer than that, but generously, 90 days on that. So what is that head of sales reputation looking like? They come on board maybe in November. The board, their colleagues, and all of that are going to give them a couple of months to kind of find their sea legs, but really expect them to start performing January 1st. If we just take that 90-day recruiting cycle, the board is already recruiting their replacement the following January 1st, and they didn't just wake up that day and say, let's replace them. They had to have doubts at least as soon as November, December, but probably even earlier in the year. So all of these CROs that are getting turned over for less than a year's worth of performance when that decision is getting made about them. And so I also think about, from a board standpoint and investor standpoint, what could we really expect this new head of sales or head of revenue to have done during that time? By definition, we didn't go recruit a new CRO because things were going really well. 91% of these folks missing their number. You get someone new on board, and again, generously, let's give them 90 days of ramp period before we'd expect them to have any real impact. You've got to learn about the product, the message, the people, define your strategy, start training new things. So Q1 is going to be a wash for this company. By the way, this new CRO is also probably starting and signing up for a number that they had nothing to do with. It was handed to them because they weren't on board when the work was done. So Q1, maybe they're going to have a tiny impact, but we won't see much difference. In Q2, hopefully, the good ones have started to see some things happen, so revenue is picking up, and then all of a sudden we get to that summer where maybe customers slow down, maybe now all of that change is getting fed through the system, so we've evaluated sellers, we've turned them over, new ones are coming in, there's ramping. We would expect to see a dip in performance, and before we get out of that third quarter, we're already moving on from the CRO. And so as I think through that, and then we're starting to recruit the next one, we play that cycle over and over and over again. I work with private equity people, and they're really smart folks, and they're really financial folks, so they know that this is really expensive, and yet they're doing it anyway. And so I argue that this cycle is not about missing the number as much as it is poor communication about the number. And so that's really what I want to think about is, how do we reset our communication with our sales leaders, our C teams, and our boards around what's happening with the number so that we can, one, run better businesses, and from a self-interested perspective, keep our jobs. I always say, it's okay to tell you it's going to rain today, or that it is raining, and it's terrible that it's raining. Boards, investors, everyone else can weather those storms and say, okay, we understand it's tough, let's put on some raincoats, as long as we all agree that we got to go put on our umbrella and have an idea of when I'm going to get to put that umbrella away. But the CROs who are getting in trouble are the ones who can't tell you it's raining, can't tell you when it's going to rain, or when they think it's going to stop. And so these are actual quotes that I've heard in board meetings that I've sat through, where people say, okay, you're not hitting your numbers, what are you going to do about it? And literally, CEOs and CROs are saying, we're going to double down. We're going to find ourselves a new gear. We're going to get creative, and we're going to really dig deep, and we're going to look at a lot of opportunities, and we're going to try really hard. And it leaves the whole board and the investment team saying, you have no idea what's going on in your business. And that's really where the anxiety comes. And so we really want to, first off, if we're not doing it already, start grounding these conversations into those building blocks. The first question we opened with today, what's going wrong in our business? We set out with a plan. Are we struggling with renewals? Are we having renewals not at the rate we expected? Are clients not taking our price increase at the rate we expected? Are we not recruiting our new logo sellers or ramping them fast enough, or is that motion broken? And so on and so on and so forth. So really step one as we think about the second half of the plan is document your assumptions. Now I know this group is a really smart group, and most of you probably already did this. You started the beginning of the year and you've got, here's what the whole year is going to look like. So you've probably done that. If you haven't, this is a great time to go do that for your second year and think about for your second half. Think about all of your sources of revenue and think about what your expectation is so you have something to measure it against. It's a really simple example. This is a smaller company. It's $44 million in revenue that they're chasing, but it's a simple one-page plan for the annual goal. So the rows down the side are all the different sources of business. They've got a senior new logo team, a junior new logo team. They've got their install base that they're going to sell things into. They've got a new product that looks like maybe is launching in June, or hopefully launching a couple of months before, and they think they're going to get the first sale in June, and they've got renewals. And together, that's added up to this $44 million plan for the year. Now, what I love about an annual plan like this is it's one page, and I encourage everyone to print it out. I always have had mine taped on the wall in my office so that every day I can say, I'm sitting in April, I'm talking to the head of which business unit, what's the goal supposed to be? But it also plays really nicely into board decks that we can keep coming back to. Here's the assumptions we started the year with, and just start coloring in the squares, red, yellow, or green. That was a good expectation, it was a poor expectation, so that we kind of know where we need to course correct. The really great companies have data on seasonality. So they've started this kind of $44 million, and they've spread it across all of their different channels. And then instead of just taking those numbers on the right-hand side and dividing by 12, really great companies have a sense, looking back at the last year, we did 3% of that in January and 20% of that in February and so on. So you get a little bit of spread. And then finally, all of our RevOps folks are really great at sharing, what were the leading indicators that had to happen to get us there. So I have a senior new logo team. They win 33% of their deals, and their sales cycles are 6 months long. So if I'm expecting them to close $700,000 in December, they needed to have $2.1 million of pipeline created in June or July. My install base team, upselling to existing customers, they've got an 80% win rate, 60-day cycles. They've got much less that has to go. So again, creating sort of for the whole year what your annual plan and expectation is, and especially for the second half, now how do we think this is going to reset, or how do we think we're going to get to the second half? How many people are doing something like this today? Excellent, awesome. Okay, so that immediately raises the level of conversation with our boards. So instead of digging hard and finding another gear, we can now start to talk about the very specific strategic things we're going to do about it. Oh, I didn't ramp my new sellers fast enough, or I didn't recruit my new sellers fast enough. And so one, what do those assumptions mean for the rest of the year revenue, now that we know what we know about ramp times and people in the seat? And can I start recruiting, my HR colleague and have the CHRO part of owning the number here and making commitments for backfilling open roles, getting people in seats? What about my RevOps folks? Product people. We were 2 months delayed on that product rollout. So what does that mean we need to do in terms of shifting expectations on what revenue we'll expect? Et cetera, et cetera, et cetera. And starting to talk with all of the rest of the C team of course, I'm the revenue owner, I own the number, but where do we see the missed expectations, and what can everyone else contribute to fixing that for us? Now, on the new logo side, how many people are sales enablement folks in this room? All right, a fair bunch of you. On the new logo side, I also work really closely with my sales enablement team on this idea of sales velocity. I don't know how I sold for 25 years, and no one showed this to me until like 18 months ago, and now it's my new most exciting thing. So again, if I'm just the stupid one and you've seen this, good for you. If not, here's my new favorite metric. So it's basically a measure of how much are you selling on a day, a week, or a month, or a quarter. And we're looking at total number of opportunities in the door, times the opportunity size, times the win rate, divided by the length of sales cycle, and it yields a number. We sell $3,000 a day, $2,000 a day. But where I really got religion on this is I was doing an interim CRO role for a company that said, JD, come on in because the sales team is a disaster. You've got to go teach them new sales skills. And I picked up the phone to Tony and I said, hey, Tony, let's get out our sales playbook. We're going to teach them about Medic and MedPix, and we're going to really, raise the skill of the sales team, and that's going to be the result there. Because this board had seen sales velocity. We're not selling it enough, month by month. It must be a sales problem. Well, I got in the door. I sat down with the RevOps person, and they said, JD, your sales team's win rate is 34%. It's pretty good. There's not a lot of improvement that we can do there. So, in my brain, I was like, oh, there must be a pipeline problem. So, hey, Tony, let's go talk to the, chief marketing officer, and we're going to really talk to them about lead gen, and we've got to get a lot more opportunities there. And they pulled out all of their metrics, and they said, we're creating twice as many opportunities as we ever have before, and you're converting them at the same rate, and et cetera, et cetera, et cetera. It's not a problem with you. for this company, it really was about opportunity size. And the market had shifted on them with all of that economic uncertainty. So their average deal size had dropped, seemed imperceptibly, 5%, 5%, 5%. Suddenly, this whole math was all messed up because they were missing their numbers with a pipeline that was 20-ish% lower total revenue than expected. If I hadn't looked at all of these little components, I wouldn't have known what to do about that. Now, my RevOps and Rev enablement people said, okay, now we're going to start looking at these kind of data points team by team, month by month, and it's going to inform what are we going to do to course correct. And so once we had finally diagnosed opportunity size was our issue, then enablement was able to work with the team about how do we start going a little bit further up market. And then later when we found teams that their deal cycles were elongating, RevOps, Rev enablement, diagnosed that and said, now we're going to do some training on how do you create urgency, how do you do close plans, and all of that. But it really was by orienting the board and everyone else into these small components that got everyone rethinking what's the real problem, what's the course correction, and then give them a roadmap of the metric we're going to watch for the next 6 months to know that it's going better. Kind of similar process on account management. I'm sure that everyone's got a great account management plan, but surprisingly, we don't see it all the time. Who are all the contracts that are up for renewal for the second half of the year? When is their renewal due? Have we looked at their contracts to see what price increases are allowed? Have we looked at any sort of measure of customer satisfaction to know if they're happy or upset with us? And then literally account by account, month by month, that same kind of grid that says, you know what, Apex Zenith, they're a somewhat satisfied customer. I could give them a big price increase, but I better not, so we won't count on that revenue. I've got really, really happy customer, Lumina Core. They'll let me give a 6% price increase. Really going to double down there, and so on and so forth. Who should I expect to churn? So again, we've got sort of this monthly chart that we can start sharing with other folks, presenting to the board, and kind of coloring in all of our boxes to show where's our assumptions going well and where are they not. Make sense so far? All right. So once we've kind of done our assessments and we've figured out what's disconnecting, now we can start communicating a correction plan. I'm working with a CRO who's in a troubled business, and he's trying to do that duck on the water thing, where, really smooth sailing on the top, and down below he's paddling like heck, but he doesn't want to tell everyone, and everything's going really well. And so we're coming to board meeting after board meeting saying, I'm going to hit that number, don't worry about it. And so far, he's been able to get it. There's always been the one big surprise deal that we pulled out at the end, and it's covered for all of the paddling down below. I really want to encourage our sales leaders, when you're communicating with your boards and your executive team, to not be the duck. Because what's the worst that can happen? I'm smooth sailing, promising all of this stuff, and in the back I know I've got this $2 million deal that this quarter is contingent on. Worst case, we don't get it, and at the very last minute I have to tell everyone we've got $2 million less. So now we have to do layoffs, and now we have to do cost cutting and all of that kind of stuff. Obviously a terrible result. But the reverse is true too. Let's say he hits that number again and again and again, and we never talk about the fact that we're only getting there because of the one single deal and the heroic efforts. Eventually, it's going to come crashing down on us. So instead, I really try to talk about clear communication all the time about we're heading into rough waters, we're pulling over on this shore, and our little strategy is to do whatever it is we're planning to do. I'm committing this revenue number. I could get to this other place if everything works out really well, but I'm not sure, and here's all the things that need to go right so that we're getting collective action. All the rest of the C team on board, all of the rest of the board, and not just my weight on my own shoulders trying to make it all happen. And then finally, whatever the strategies are that we have for the second half of the year, I'm a huge fan of rolling this out to every seller as well and having really clear, transparent communication with the company about what is our strategy for the second half. Now, of course, I have never seen a sales kickoff that I don't love to do. And so if there's an opportunity, I'm going to bring everyone together and have some sort of a physical kickoff. But even if it's just virtual, or even if it's just a 15-minute, thing on a company town hall. I really like to come up with some sort of a pithy brand about what our strategy is that we can rally our employees around. So one of the companies I'm working with right now is really just struggling with forecasting. They've got pipeline, they're not really good at assessing their deals, and so they're kind of wildly up and down, rep by rep on what their commitments are. So their theme for the second half of the year is on target. And they're telling people really clearly, I'm not expecting you to make your quota. In some ways, I don't care if you make your quota, but I really do care that you can make your commitment. And so everything is all about, their team building events are archery and axe throwing and all of this stuff. But it's driving home the point that I want you to aim, I want you to tell me where you're aiming, and I want you to hit whatever it is you aimed at, regardless of where that happens to be. Another company is doing this whole +1. We've got all of these suites of products. We've done a lot of M&A. You sell a lot of deals, and now we want to just be sure you add one additional module than you ever had before. One more link in the chain. I remember this. Actually, it may have been. I know there's LexisNexis people here. May have been when I was a LexisNexis seller in 2003, where they talked about if every seller, we're as strong as our weakest link, and if every seller could just sell one thing every quarter of any size, that's our strategy. And so you are one more link in the chain. And they gave us all of these carabiners for every quarter we could sell something, and this is like a really visual thing. And then finally, I worked at a company most recently, Cantata. They were a musical company, and they had a really good playbook, and they just had to keep repeating it. So we talked about the musical symbol for repeat, and just keep doing your playbook over and over it is. Whatever it is that your strategy is, you'll get a lot of value if you can work with your marketing team. I love these little blueprints here. Give someone something that they're going to remember on and that you can rally the team behind. And then finally, report on progress as it's going along. I spent 7 years working in a Thoma Bravo portfolio company. Any Thoma Bravo people in the room today? Portfolio company and Thoma Bravo owning you? It's an exciting company to work for sometime. But one of the things that they really ingrained that I have taken forever, and you'll find in your book, and there's a downloadable template, is the weekly flash report. And it's just a simple cadence of communication that you can have hopefully your RevOps person do with you to get everyone aligned on what's happening in the business. Now, I admit it's a really convoluted eye chart, so I'm going to kind of build us up there. But it starts across the bottom. What week of the quarter is it? So this is a quarter that has 14 weeks, and so we're using that as our x-axis. On our up and down axis, this company is trying to sell $3.8 million of new stuff. So that's the little red dotted line. And up above that, the red dashed line is how much quota is on the street. They did all the right things. They put more quota on the street than they needed to. A seller left sometime in Q4, so we see the quota on the street sort of declined. But the good news is they still have way more quota out on the street than they need. So that's sort of the basis here. Then as every week goes by, they have their forecast calls. They put another little plot. What is the team forecasting? Again, good news, because it's a demonstration and not real life. They're forecasting that they're going to make their number. Every week they've said, we're going to make it, we're going to make it. And the good news also is every week that forecast is going up right in that band. So great company, a great report to give. Down below, what's the actual progress been? What have we booked so far? So this darker green line, it's cumulative. So week by week we add the new sales. And if you stop right there, you've already trained kind of your board and your executives and so on to get a really quick vision of this company's probably going to do okay. Green line's going up, forecast is there. I'm sure those two are going to touch in the end. If you want to give them a little bit of extra confidence, you can put that against the backdrop of what did we book last quarter, what did we book this quarter last year, so that you can have a really simple kind of snapshot of whether this is the whole company or an individual team. Here's the state of my business. And when the lines go ugly, we can talk about that too. I know people are taking pictures. Thank you. There's a downloadable template in the book, an Excel spreadsheet ready to go. You just plug in your own company's numbers, and you can start sending this to your board tomorrow. For extra bonus points, so this is my Thoma Bravo and JD weekly flash report. So that's our revenue bookings. Over on the right-hand side, same kind of chart that's talking about pipeline growth. So that we see these little stair steps. This is a business that has sort of monthly pipeline development goals. So every 4 weeks, we want to have some more pipeline out there. The buffer on the top, what's the SDR capacity on the street? Am I creating enough pipeline, and so on. Right across the middle, if you have a CFO that really wants to see all the details, you can give them the team-by-team breakouts of commitments, forecasts, achievement, and so on. And then finally, just a couple of quick, bullet points of commentary. We are committing 94% of the number that we need. The big 3 deals that are going to swing this are these 3 deals. Here's what the special issues are about them. So, if you're optimistic that we'll resolve those, here's where it's going to end. If you're not, here's where it's going to end. Being in this cadence and then sending this out again after every forecast call to every sales leader, every member of the C team, and every member of the board has saved me so many times. Because even when the news is bad, we're not waiting till the end of the quarter and having me show up at that board meeting say, I missed the number. And I've definitely missed the number. But showing up by the time we get to the board meeting, able to say, you've seen this progress week by week by week. We've all ridden this journey together. And let's start getting a collective mind on where are the particular breakdowns so that week by week by week, we can talk about whatever our new strategy is for the second half of the year. So that's my thoughts. I'd love to hear from the group here. What are your kind of thoughts about your second half plan, and how are you communicating and implementing those in your own organizations? Or what best practices or tips are you able to share with your peers? Our not public company guy, just like what's happening in your neighborhood.
It's really interesting because we promoted a new CRO last year. And I think he's read your book, because what he started doing for the first half of this year is exactly what you described. He started off saying, okay, plan is this. I'm going to commit this to plan. And here's exactly the gap between the plan and what I'm committing and what I need each part of the business to doing to get there. And we've got some product commitments. We've got some new sales plays. Each of those should give us 10 million, 10 million, 10 million. And latest board update, red, green, red for each of the areas. And this is why I'm not going to change my forecast for the moment. And we've started, feeding that out and getting our sales leaders, our business units to work in the same way and show us everything they're doing in their kind of quarterly, monthly, and even flashes towards end of quarter, break things into those sections, show us the pipeline that they're generating in those areas. So when we come back and say, this new product, we're not going to sell enough of it by the end of the year because the team can't generate pipeline, because this product's going to be late, or the enablement's not good enough, or we don't know if we can monetize it in the same way as the start of the plan. So we've been putting in this idea that each sales leader breaks down their stretch, as it were, and then we ask them, do your forecast no matter what, show me how you can get a stretch on top of that. And the plan's kind of important, but we're more concerned, can you hit the forecast?
Yeah. And how has the conversation changed in that
It's got more realistic, I would say, versus last year, where everyone was just saying, I'll hit my number, don't you worry about it, to much more now about realistically, this is what we're going to do. And we're seeing some sales leaders who are finding alternative ways of doing things, which is nice because we're actually seeing paths out of it, and other sales leaders getting more worried now because they don't have a path out of it. They don't have the control that they necessarily thought they did.
Yeah. Cool. Thank you for sharing. Other experiences? It's over here.
I would just reinforce, the point around making sure you know every single quarter what your capacity is and what you have out on the street for quota, because oftentimes that can erode over the course of the year. I'm currently selling on behalf of a professional services firm, and actually had to show the managing partner that he doesn't have enough capacity to get to the plan, even if my sellers sell it. And so whether it's on the product side or on the sales side, knowing each quarter what your capacity is and can you get to your plan is, it sounds so basic, but realized he needs to go hire 30 people if we're going to hit the plan this year, because he wasn't doing that math.
Well, and it's partnering also with your HR team and your enablement team to be realistic about when we set the annual plan, how many people voluntarily left the company? Let's plan that we're going to see, 5%, 10% turnover. How many people are we going to exit? Let's plan some of that in. And then enablement, how long did it take to bring them on? Because it's not a one-for-one swap out on quota on the street. Yeah, excellent.
I'm going to add one more table to your flash reports. So my previous role was with a Marlin Equity portfolio company. And when I joined, there was very little discipline around the pipeline, which is why Marlin was involved. And so one of the things that we did very early on was stage and age integrity analysis that we would send out on a bi-weekly basis to the board, actually. And this is the health of the pipeline. This is where we're weak. This is where we're strong, because that is one of the strongest leading indicators. So what's going to happen next? So I love I took a lot of photos of your deck, but I found that to be very helpful too.
I love that too. I have a RevOps team in one of our portfolio companies that's doing, it can't be AI, but I'm not sure how they're getting to the data, but they're using Medic or MEDPICS or some version of that as their methodology. And so the first thing that they're doing is they're looking at all of the deals that are stuck in stages, and they're saying, which are the MEDPICS questions, and that's the training session for the next 2 weeks. And then the second is average time in stage, that we know stage 2 is usually 17 days long, and so we're getting alerts like, your deal's 20 days long, let's start doing a deal inspection on that. And we're seeing a lot of kind of help there, results from there too. So I like that. Thank you for the addition. Other thoughts, best practices to share, or questions on anything we've talked about so far?
JD, my question is, we hear a lot from the PE firms that we work with that they all want and are frustrated by not having data-driven CROs. I don't know that I've met many CROs that don't want to be data-driven. However, many are operating in systems and organizations where the data isn't readily available or isn't gleaning, as Scott was talking about previously, difficulty turning the data into insights or having all of the systems instrumented together to give them the right, level of insight. I'm curious your experience or others in the room around how they're feeling about having access to the information in a timely manner to make some of these choices.
Yeah. I'd love to hear the room's experiences. For context, most of the companies I've ever been CRO for have been 100 million in revenue, going to like 300. Most of the companies in my portfolio are going from 50 on that journey. And I know that that's different if you're a billion-dollar company and if you're a smaller startup. I would say in my experience right now in our portfolio, revenue ops is the number 1 role that everyone is trying to hire and really build out a RevOps team, because a lot of CROs don't have that skill. And especially from on the lower end of our revenue, the businesses that are 40, 50 million in revenue, their heads of sales got there because they were great sellers on their own, and they're still kind of thinking in that Superman mentality that, just bring the leads in and I'm going to go close them off myself, and we'll get there by me working really hard. And I think that's the hardest transition. We talk a lot about the ages and stages of development of a company. The hardest transition is to move, right around that 50 million mark, from being someone who sells really well to just someone who manages data and does that really well. And often the best salesperson is not the best data manipulator, and so it's a different kind of leader. And we're really supplementing that with RevOps. I cannot hire RevOps people fast enough or find enough of them. But what is everyone else doing with data management, and what does that look like in your own companies? As we're thinking about that, I'm famously a big advocate of Clary. I know there's lots of tools. They're the title quote on the cover of the book, and so I'll tell you, I love Clary. But I famously didn't go to Cantata. Part of my job offer there, as I said, I will not start this company unless you commit that you're going to buy Clary, so that I have a data man. And it wasn't about Clary specifically, but although it sort of was, but I needed a data management system to deal with these kinds of issues. Yeah.
Sorry, me again. I'm part of a London RevOps group, and we talk a lot about this, and there's something very clear with startups, scale-ups, and similar in the RevOps thing. There's 2 profiles of RevOps leader. There's those that live in the technology stack, and those who understand the business. These companies need someone who understands the business, who can be a true holistic RevOps leader. and can cope with the technology stack. Most companies acquire a technology person who does process and technology, build it up, but they don't truly understand the business as much as someone who comes in as a RevOps leader. I'm biased, that's my background, but that's what you need to understand it. Someone who will just do what it takes to get that chart or whatever chart you need to understand your business on a page, on a cadence.
Yep, absolutely. And that's been so much of, I know, Tony's work and I've been fortunate on, 5 exits. They weren't all the best, but the ones that were really good, it was because we worked with Tony and team on really what is the process, what are the things we want to measure so that, yes, I need someone to come stand up Salesforce and be my Salesforce administrator, but really as the distracted CRO, I need someone who lives in Salesforce and whispers in my ear, look at this problem over here, like your sellers can't deal with stage 3 or this objection or whatever it happens to be, so.
I was just going to crack a joke. You've referred to Tony and his prowess several times.
And Jamie's been on a lot of these things too. He gets a lot of the blame.
No, Tony's amazing, and thanks for your insights, JD. Really good stuff.
All right, thanks. All right, I know we started a little early. I don't know if we're going to end a little bit early. Anything else to share with this group? Or on any of these topics? Yes, ma'am.
So you talk about data for the CRO, and we have spent a year building these beautiful reports for our president, our CRO, but those great analytics don't get down to our frontline leaders, right? So we do have all of those data insights, but it doesn't get down to the people that are leading the teams.
Yeah.
So I'm curious just what others are doing with that, what you would recommend.
For me, that's what this is about. So that, and I like a sales kickoff, and I'm a little bit of a showman, but so I like to boil that data down and talk about, it's about consistency, or it's about deal size, or it's about forecast accuracy. And so here's the reports, and yes, that weekly flash report is going to, send the data out, but then I'm also always going to drive that connection back to, so are we on target, or are we doing the +1, and trying to make that easy for the 23-year-old BDR and everyone up the chain. But what's everyone else's experiences? Yeah, with this getting a lot back here now.
So I have a question back to some of the different levers that you presented at the beginning. One of those levers specifically was the channel. So channel partners. So everything we're talking about is a direct sales organization. And so, looking now at partner sales, activating a channel, and driving a channel, getting that data, managing that data, and then using that to train the channel and make the channel more efficient. Just any comments around where you see that as, where you can drive some of those levers versus not. And, having lived in a couple of different worlds, I see partner sales as critical as part of one of the assumptions, but yet it's an indirect channel and therefore a lot more challenging to manage and to drive. So just any comments on that?
So boy, I hope SBI will do a conference and find someone who's an expert at that, because I've never been good at it. For me, channel is always a 4-year proposition. It takes a year to figure out who they're going to be and a year to sell them on the idea of the partnership, and then it takes a year to enable them on it, and then it's the 4th year that we start to see any revenue. And I'm in PE, so we're already out by then, and so I've never seen it work out. I would love anyone in the room who knows how to make partners work really well to share.
And one of the things that we're seeing quite a lot of is that from an AI application layer perspective, channel is actually one of the more exciting portions where AI can be applied quickly to start, low effort on the partner side, high impact, if they sign up for it. So one example is a tool called Fluency, which listens to all of the call recordings. You hook it into Gong, and then, it'll listen for signals for your product, for example, and say, hey, they just mentioned sales efficiency. That's a trigger for you. It'll send something to the channel rep and send it to, the SDR's manager to say, hey, this is a good opportunity for a distributor who has 100,000 SKUs and has no idea, what to push for. Similarly, on the, the sales enablement perspective, we're starting to see so many more folks focus on tech enablement, not so much teaching people how to use the tools, but when to use the tools as part of a customer journey. So it's not just that you know how to use Zoom Info. It's you're supposed to use Zoom Info at stage 2 in order to do X, Y, and Z action. And again, in terms of a just-in-time AI Copilot application, it's that pop-up to say, hey, we're surfacing this data to you now, specifically to drive this action that ties it back to your buyer journey, that ties it back to your playbook, and so on and so forth. And so we're in early days, of course, of this AI stuff, but those are the applications that it doesn't have to replace people. It needs to be that exoskeleton to start reinforcing the proper behavior.
I can jump in on your question there too. I think the hardest thing about growing a channel business is everyone who is a channel partner is focused on selling what their business is, right? And it's hard to keep their focus. So one thing we've done really well, about 75% of our business comes from PE firms, and we were really, really specific about our tier 1. So 3 PE firms, weekly calls, QBRs, we just live with those 3 PE firms, and they're thinking about us all the time. And we're really maniacally focused on not allowing a bunch of other distractions to come in. We partner with them, but we don't engage the same way that we engage with those 3 PE firms, because they have to be thinking about you consistently to really drive the business that you want. So.
Yeah, good. Please tell us.
So when I was at Salesforce, we built a very large partner ecosystem and very large partner business. And one of the things my team did was we were responsible for building out how we thought about where we intersected. And there's really one word that matters here, and it's enablement. Nothing else, everything else is secondary, tertiary. The one thing that matters is a robust enablement plan, more so than you do for your reps. Because they're not living and breathing your company culture, and you can talk to this at length as well. But they are the enablement process that you build for your channel system will make or break it, and everything else comes after.
Okay. Well, thank you. Thanks for the great conversation. And next we're going into roundtable breakouts, right?